Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, it is Wednesday. We got PPI this morning, but yesterday, I don't have to tell you what happened yesterday, but I'm going to tell you anyways. You know, for historical purposes, people way back, you know, many decades from now, and they're going to be like, remember that one day when what was Sept doing that day? Well, and then we'll see. But here first, look, the S&P did actually breach the the NQ did breach the biggest range day of the year. What a disaster. What a disaster. Here it is over here. Remember, there are still a lot of analysts that got that 3,400 punched up, but you know what? We just retraced this up move that we've been having recently. That's so the thing I want to stress here is that it's not necessarily the end of the world for the economy. There are still some positive flows that are likely to come in. We are in a blackout period right now for corporate buybacks. When that ends, that's going to help a lot. Okay, so I don't want to be like, oh, it's bearish. We're going to go down to 3,400. Nah, let's just take it one step at a time. Okay. Treasuries did push a little bit lower here in the overnight action. Although I don't like the way that it is behaving here at the moment. It's a little bit iffy and showing that we're in a difficult location liquidity wise. Oil yesterday getting a bounce from the Biden administration saying that they will refill the SPR at $80 a barrel. This seems like one of the dumbest things you could possibly say. I digress. I don't want to go into it too much yet. Do that later, but man, what a stupid call. Supporting oil there. And gold and silver, well, listen. Silver's not so bad actually when you look at it, right? Silver's not so bad when you But they got creamed yesterday. And Kappa got hammered. Ugh. Copper got hammered. But yeah, you know, it might be okay. Copper might be okay. All right, we'll see. Bitcoin finally. So Bitcoin held on for a long time, and then somebody really puked at the end of it. But look, we're still not down to like last week's lows. So I don't know. Does that mean that there's a short opportunity there for Bitcoin? I don't know. What they do just never seems to make sense. So they're not like other assets. And then we've got the dollar taking a huge jump. They are a little bit weaker here. The Japanese yen is showing a little bit of strength this morning, but so it is coming back a little bit. And we've got PPI here in about 4 minutes. So PPI month over month, we're looking for negative spot 1, and core PPI month over month, we're looking for spot 3. So it's the numbers are pretty close to what the expectations were for yesterday's number. They don't necessarily have to be bad. Okay, it's possible to see consumer price inflation be rising significantly and producer price inflation not moving. Okay, which would be, well, Democrats would probably go gaga if that's what's happening, right? Companies are raising prices on everybody, even though it's not their input costs aren't increasing. That's what they say. So we'll find out in 10 minutes here. In the meantime, lovely music, very lovely calming music to get you calm and zen. That's what we need, is calm and zen, because yesterday was so crazy. Radoslav, good morning. How are you? You guys, by the way, Did you guys fare yesterday? I was so incredibly frustrated because I held, was never able to get a whole lot. And even if I had still been in, oh, well, I guess maybe now big 60 picks, but really frustrating for me in the treasuries yesterday. Did not get much out of the big move. And of course, I own a 401k like everybody else. So the downside, it hurts, right? I mean, it doesn't really matter because I'm going to keep that till I'm 60, and surely by the time I'm 60, the S&P 500 will be higher, right? But it's still painful to look at. I didn't look at it. I'm not going to look at it. I'm not going to look at it. It's just yesterday was so bad. But here's the thing. Like I said, there's a lot of things that can it's not necessarily the end of the world. Okay, inflation is still a big problem. The Federal Reserve is going to have to continue raising interest rates higher or longer, like they said. And yeah, could that lead to a recession in 2023? Sure looks like it. But there are still positive flows that will come in from time to time. And so we'll focus on what the next set of orders is going to be, right? There's a lot of people looking at these charts and trying to predict that this is going to turn out just like 2008. That sort of analysis, like maybe it goes down, okay? But that sort of analysis is not very accurate. In fact, I was kind of laughing yesterday because so many people on TikTok started showing that, and they had adjusted it. Like they had been showing that last month, and the month didn't go the way that they wanted, so they've adjusted the chart to fit better again. Okay, here comes the numbers. What's the core number? What's the core number? Spot 4. Well, that's interesting. He's giving me an opportunity at 3.47, but I think I'm going to pass. I'm a little... So the way that this liquidity is kind of makes it hard for them to continue pushing down. So we'll see how this turns out. But I definitely don't want to be like pushing into the lows of the day, hoping for a breakout in this kind of situation. Did you see that the train union might strike on Friday? I did. I've been following that very, very closely. Actually, I tell you what, man. TikTok is an evil app. But every once in a while, it gives you really useful stuff. And the ability to have a person in an industry giving you daily insights on a particular subject is really, really valuable. That's the way that I try to approach it with treasuries, is like I'm telling you, okay, I'm on the front lines of interest rates. Here's what's happening, right? So there's been some guys from trains talking about what's going on. I think that the train unions have a really good case. I think that it's going to be, if they strike, it's going to be a big problem. Yeah, it's going to be a big problem. That's an inflationary pressure for sure. Okay, so you see where I was kind of like, you gotta be careful. They might be pushing through. It does look that there was not as much volume off of that release as I thought maybe there would be. Just want to note, it was US core PPI month over month spot 4 versus an expected spot 3, so it was only slightly higher than expected. Yeah. Like if I were to catch the bottom end of this, like 4.5 maybe. Let's see. Right. So anyways, we do got share buybacks that could help. The consumers still look strong, although one has to wonder how much longer that will actually hold up. Yesterday was such a big down day. If today in the S&P 500 ends up being another really big negative day, then we're really in trouble. I would probably think that you're either going to get a small down day or you're going to get a retracement. I think that a retracement might actually be very likely in the S&P 500 here. Yesterday was just really crazy, right? So for the economy, I mean, it's a big shift for the economy, but in terms of like numbers and predictions, I don't know if that should change people's numbers and predictions a whole lot. Like the whole thing was that whole rally that we were having last week, people, nobody liked it. So maybe this kind of puts people back onto their previous scenarios. But the thing I think this has the biggest impact on is Joe Biden, man. This is going to really hurt Joe Biden. And at the worst time for a midterm campaign, I must say. A really, really bad timing for a midterm campaign. Because, he was trying to turn the narrative into Trump supporters are dangerous and that's why we're arresting them all, because they were trying to overthrow the government and stuff. And now it's going to turn into this is the most economically incompetent president of the modern era, and he's turning into a Nazi, arresting his opponents. I really see the like you could just see it in people's comments. It's so strange how quickly the online sentiment shifts, right? I think that online sentiment is shifting against Joe Biden and the Democrats at exactly the wrong time. That's going to be a big problem. And I think one of the ones that I think is the worst for them is this oil thing. Is like what Nimrod decided that it was a good idea to come out and tell the market what price you want to buy oil at. So first of all, we filled it much, much lower. And if we're going to be going into a recession, why wouldn't you just let the oil fall all the way back down? Like heck, if this is really the kind of recession that yesterday's price action would suggest. Of course, it's not indicative of anything, but if we were just to go off of that, then yeah, you're going to be able to get oil a lot lower than $80 a barrel, right? But meanwhile, what you're doing is you're basically just giving the oil traders a reason to buy it there and make sure that it doesn't actually get to 80. So why does the government insist on telling everybody what their trades are going to be ahead of time? It's so dumb. It is such a disservice to the taxpayer. Like really, that one, you put all of those things together. So like, don't let energy prices crash back down. Prop them up. Great. That's gonna be great for you in 3 months. Oh, it's such a dumb decision, right? So I think that what happened yesterday is actually more significant politically than it might actually be economically. But the problem that I see economically is that we've got an inflation problem and it's not going away. And you may have to raise interest rates a lot higher to see that force go away, because there are still things pushing money into the economy, right? Like the Inflation Reduction Act. The only thing that was really would reduce inflation in that act was the parts relating to healthcare. And like, look, it's not going to reduce health. You know, your health insurance is going to be significantly more expensive next year, right? Either way. So it's not really going, that's not going to help you. There are things that Democrats could do to help the inflation situation, but they're never going to do those things because that would involve helping large corporations, right? So how much further does the Fed have to go before this ends? When I start to game that out, it's a little scary for me to think about. Okay, so price really looking directionless and choppy here, but it is slightly to the upside, and I think that probably gonna see further upside here. Not confident enough in that one to try and take a short. I think that the momentum is still on the short side in the treasury. Sorry, it's not enough for me to go and take a long at the treasuries because I still think that the larger trend is down, but let's keep an eye out. Probably something that we will see today that I think could move markets would be large what do we call these, large analysts, rather big analysts coming in and calling for a 100 basis point hike. Did you know, like when we were talking about it yesterday, the probability of a 100 basis point hike was like 20%. Now it's like in the 40s, 50s%. Like, that's pretty crazy. It's kind of funny because when we were talking about this, I made a TikTok where it was like, well, everybody's getting excited and they think they know what's going to happen. But I say, leave your pants on because we don't know what CPI is going to be yet, right? And, you know, and when I posted that video, there was some people saying, well, I mean, look, it's 99% chance that it's going to be 75 basis points. Well, when you have a big CPI report like that, just within the blackout period of the Federal Reserve, so you can't be too sure. You just can't be too sure. A higher risk of the market is definitely that the Fed is too aggressive. I mean, after they mess up with inflation as transitory, then now it looks like they do it with interest rates. Well, I would actually argue that in order for the Federal Reserve to get a handle on inflation, they basically have to be too aggressive. So like too aggressive is not actually too aggressive, right? There comes a point at which in order to control inflation, you do have to create a recession. So that's not too aggressive, you know. When you put it like that, the reason why I'm kind of pushing back against the way that you said that is because I hate when I say when you, because I'm like focusing, it's not like you're bad or you're wrong or anything, but I just want to point out, like, there are some people in the market that are saying that the Federal Reserve is going to make a policy mistake, and I don't think that that is the case. I think that the data says that they have to raise 100 basis points here. Yeah. And the problem that I see over and over again is that people think that the price and, you know, the patterns and so forth that the S&P 500 has made matter. They don't matter. They're not reflective of the underlying fundamentals, and they don't necessarily tell you what the next set of flows are. I mean, there are some flows that react to that stuff, like CTAs. There's a really good example of where you can look at how they moved yesterday and how CTAs are going to change their positioning and make estimates about how much money is going to come into the markets and certain directions because of CTA funds rebound, shifting, right? And it looks like that CTAs are probably going to come in and do shorts in the S&P 500, right? But that does nothing to predict how many buy orders are going to come into the market from share buybacks next week, right? You get what I mean? And it has nothing to do with how much does the Federal Reserve have to tighten interest rates in order to cause the banks to pull back on lending in order to bring demand back in line with supply, right? And with the way that things have been going, it seems to me that like when things are going well, that you can have the rates can go super, super high, but people can just run on the momentum and that the loans don't necessarily matter. So yeah, but so if I was to rephrase what Tobias was saying there, I think the risk to the market is definitely that this makes the soft landing scenario extremely unlikely now, right? I'm not going to take it off the table, but it doesn't seem very likely at the moment. That is not, my God. Too political. There are some political issues that I would really like to talk about. I'm seeing them in my own life, in my own community, and I feel like I have things to say about them, but they're things that would be against what a lot of social media companies are kind of punishing people for sharing, and it has nothing really to do with the market at the moment. And so I have to hold my tongue, but I want to talk, and I'll see stuff come across on Twitter and I just can't help but laugh, but I really shouldn't share them because it's not relevant to what we're doing. So in my opinion, there's risk that they either raise too fast or they raise longer than what is really needed. We need a recession, but the Fed can control how this recession is going to be. Well, okay, so there is an issue in that the effects of Federal Reserve policy aren't apparent until later, right? But here's the thing. I personally am not too concerned with them over tightening when the interest rate is only 3.5%, right? So there's kind of two ways of looking at this. I wish I knew a model way of expressing this to you, because I'm sure that there's a mathematical way of going about this, okay? But when you raise interest rates, it has a tightening effect on the market. So raising interest rates from 0 to 0.25 has a tightening effect on the market, right? And that should slow the market momentum somewhat, right? But the absolute level of the interest rate also has an impact, because in the end, what this is really about is how much capital do banks have to hold in reserve in order to fund their operations. Because basically, when you raise interest rates, what you're doing is you're making it more expensive for banks to perform operations, right? You're making it more expensive for banks to perform operations. So, and because of that, they can't loan out as much money, and so that's what slows things down, right? That's very different from like coming in and changing how much in reserves you have to hold, for instance, right? because you can only loan out a certain percentage of what your actual assets are, for instance, right? Okay, but like that's really different, right? So if we come here to interest rates are 3.5%, that is a typical interest rate. That's not that expensive for banks to operate under, right? Now there's this other theory going around that, you know, an inverted yield curve is really unprofitable for the bank, and that causes them to hold back on lending. So we would want to look at indicators that show us how much banks are lending out. But you know, so with interest rates that if they get to 4% by the end of the year, let's say, and then they keep them there, is that really going to, like, that's too much and that's going to trigger a deep recession? I don't think so. I think that you would have to get interest rates significantly higher than that to really create like the sort of doomsday scenario that really kills banks and creates a super deep recession, right? So I think that there is still a possibility that we have a deep recession, though, maybe for other reasons, though, right? Because again, the problem that I see is that we're not doing anything that can actually resolve the real problems. Okay, so like if the problem is that demand is outpacing supply, right? We can have a recession, but like what happens to demand when you have a recession? When you come out of a recession, typically demand ends, you know, after the recovery, demand ends up being higher than it was before the recession because population continues to grow and all of that sort of thing, right? So that presents a real problem, right? You get a chart that looks like this. It comes down and then you know, eventually it bounces back up and it should be back to its longer trend thing, right? Well, if you have a recession and demand moderates, right? That only helps. Let me try and draw this a little bit differently. Okay. Let's just pretend that I can draw a line that perfectly represents the supply and demand, right? So here we have supply, and here we have demand, right? And preferably supply is ahead of demand so that they can always, you know, they can always accommodate them, but not so far ahead that it really hurts their profit margins and things like that. So what did we have? We had demand plummeted and supply plummeted, and then the supply is the yellow line, right? And then demand shot up. Demand shot up and supply was not as much, right? So if we come in here and we hammer demand again so that it comes back, oops, wrong way, wrong color. We slam demand down again so that it comes back below supply, okay? But supply goes flat, right? You still have a cap on the economy. And then you run into the inflation again, right? So the problem that I see is maybe not necessarily a deep recession, but a long recession. In other words, the S&P 500 sticks around this, let's say 35 to 45K range for several years. And I continue to see that scenario playing out, whether it's actually like a full-on recession or not, you know? Because yeah, you're going to bring demand down and that could solve inflation, but you still have a cap on the economy because you're not dealing with the supply issues, right? And what is government policy doing at the moment to resolve the supply issues? Absolutely nothing, right? They're putting all of this money into green initiatives, and from everything that I've looked at green, it cannot solve the problem. The only thing that you can do to solve the problem is to increase domestic oil and gas exploration and build nuclear power plants. That's all you can do to help on the demand, on the supply side in the end, right? Moving supply chains out of China, that helps too, I guess, right? Or China just, stopping with this zero COVID policy, that would help too, right? But in the bigger picture, it's energy is really the really big bottleneck at the moment, right? If manufacturing really moved back to the United States in a serious way, I think people would be shocked at how quickly it could come back. Obviously, there's a lot of things that take years to build, but there's other things that could come here and they could set up shop tomorrow, and they, that could happen very quickly. But the economic conditions are not favorable to make that happen right now, right? Like, you're not going to see that happen with the dollar above 110, right? The street retweets. PPI will determine Wednesday's trading. Okay. If you say so, doesn't look like it doesn't look like it's having an effect on anything right now, does it? In fact, it looks like they're on pace to go right back to 115. I mean, I said I don't feel enough conviction on this trade to feel confident in going long the treasuries, but it looks like I really should have done it, right? Because if I had gone short where I was tempted to go long and knew that it was a bad idea, that would have been $40. I would have been very happy with that. But I guess one has to think, oh, by the way, I gotta go check on something. I'll be right back. Okay, cool. I tell you a story. I tell you a personal story. So the stepson, he's in an AP geography class, and they had like their first test, and the AP geography teacher is playing the you're all gonna fail this class, but don't worry, if you pass the AP test, then I'll turn all of your grades back into A's and all this sort of stuff, right? So he's trying to scare them into working hard, I think, right? But that is not this kid. This kid is like, you get one setback, okay, I'm done. So they take this first test and they hand the tests back, and he doesn't get a test back. They're like, no, you just wasn't in here. It wasn't in here. I mean, he was there, he went to class, he's marked present. His test didn't get picked up somehow. A substitute teacher lost the test or something. Like, what? I mean, that's what he's saying, right? And so he's like, well, the teacher said I can come in and do like a makeup in the morning, but I'll only get partial credit. So he doesn't want to go because it's like, well, I'll only get partial credit and I'm going to fail the class anyways. No, that's not how this works. You're going to go, you're going to show the teacher that you're serious, and you're going to tell them that you took the test and that you shouldn't be punished for their mistake. And if they don't do anything about it, then you're going to go and you're going to take it a one level higher. Because you were there, you took the test, and you shouldn't be punished for them losing your paper. losing your test, right? Well, so he's got to wake up and go there early. He doesn't want to do it. But it's interesting the way that the human mind develops. What is it that are the best things to be doing when you're 3 and when you're 14? And then when you're my age, when you're 37. What? Am I 37 now? Yep, I'm 37 now. 37. You know? I wish that I always want to be like a go time, read all of the things, do all the research, work super, super crazy hard. But I gotta take care of these babies and I'm not always able to do it, right? I don't have enough time. And you gotta rest too, right? But I often feel like that a lot of the things that I would like to have in the kid, I miss the opportunity to put into them. But then I'm also kind of wonder some of those things might be personality wise, right? And so you just kind of have to teach them to endure and push through, right? So hopefully that all works out. I'm thinking that he's just going to go and the teacher's going to let him off easy, but we'll see. We'll see. I might have to go to school and make a stink. Ukraine and United States reach an agreement on the supply of 2 billion cubic meters of gas. Okay, well that's good. But why is natural gas rallying this morning? Also, that was a significant little top there in the treasuries. I don't know where we're going to go from here. So I'm in kind of in a difficult spot here for trading the treasury because we should be tilted to, treasuries pushing higher. Or no, sorry. I mean, the larger trend is going to be interest rates pushing higher, right? But what is the volume going to do in the next 30 minutes? I'm not sure that I have stuff that's going to give me a clear edge there. And one thing that makes this difficult is that often, you see a lot of portfolio level activity on Wednesdays. Wednesdays tend to be one of the most active days. But since we had such a big day yesterday, that kind of, puts us into a spot where I think we're likely to just have a big mess. And the thing is we did have a move that was about 30 or 40 ticks, right? That's a lot already. So we may have already missed out on the best opportunities. And if we didn't have anything to help us predict that opportunity, what makes us think that we're going to have something to predict what's going on right now? But let's just wait. We could get a catalyst here, or we might get a more clear... We might get a more clear hint in the liquidity that something's going on. I don't know. Do you think that the United States will do anything about supply before 2024? That's the thing that I keep coming back to in my mind, and I feel like we got a long road ahead of us. Let me come over here. I want to see like what some of the news is saying. See if there's any other big news stories that we've missed. Morgan K says certainly not. They don't seem to understand or care. Well, what I see is a very ideologically based administration. Okay, so like if I were to look at the Biden administration versus the Trump administration, there was something that Donald Trump did that on one hand was a really, really good thing, but on the other hand kind of ruined him. and that was that he picked people based on their qualifications. Of course, he was going to go for Republicans, but he didn't necessarily go for Republicans that were like loyal to him or his ideology, right? He went for Republicans that he was told were competent. And so overall on economic issues, the Trump administration was pretty competent, even though they were doing something extremely risky with the economy and the whole trade war thing, right? Like the trade war was a really high risk, high reward sort of move that he was making. But they were still able to navigate it quite well. And when you look at how much the economy struggled during that time compared to how much the economy is struggling now, you look back at it and you go, actually, they did a pretty good job there, even though maybe the strategic decision that he made was maybe the wrong one, right? The Biden administration, but there was a problem, was that then when push came to shove, nobody ever had his back, and they were completely willing to ditch or backstab him, right? And so this was the problem for Donald Trump. The swamp killed him. Joe Biden, on the other hand, has been completely ideological. Everybody that he puts in his cabinet are ideologues, right? And so what you've had happen is you have a bunch of people that the economy is not the top thing on their mind, is it? And even for the people where the economy is the top thing on their mind, like Janet Yellen, they're people that are going to be extremely differential to whatever line the administration is pushing. And so you have Janet Yellen saying all sorts of things that I think are out of character, and I'm really kind of sad to see how that's gone with Janet Yellen, right? So what this has resulted in is an administration that it always seems to be playing catch up on the economic issues, right? Always seems to be playing catch up on the economic issues. So it's not that they don't care. Maybe they do understand, but the solutions that they make always end up having to be the ideological ones. And so the question is there a point at which they kind of have to face the reality and say, we have to do something about supply and make a pivot? And can a Republican Congress kind of force him to make that kind of a pivot? Right. Or like, put it another way, like more specific terms. If Republicans come in and they have a bill that helps with supply in a very direct way, would Joe Biden veto it? We'll see. I think that he would. Of course he would. I think he would. I mean, kind of the question is, what can you draft a bill that he can't, that he wouldn't be able to politically, it would be too politically devastating to him to veto it? That's what Republicans need to be thinking about. If Republicans crush it in November, the first thing that needs to be on their agenda is what is legislation that we can put together that is so good that Joe Biden can't veto it. Post here in Discord here. This is a really interesting price action to study. From an order flow reading perspective, we should be able to get better reads in this location. I guess I did get some okay reads, but you know, it's a lot easier for them to move up than for them to move down right now, just because they've exhausted so much of the liquidity through this area that they're just going to get sucked up, whereas there's still plenty of bids down below. See, when we get down below that, there's a lot of them. I don't think that this move up here is like, oh, the PPI was actually really good, and we think that actually interest rates are going to come back in a big way now and everything has changed, right? You think that was what's going on? Maybe it is going on, but I doubt it. I doubt it. It's probably the case that it's just a lot easier for them to move up in the treasury than to move down because of the liquidity. Ukraine wants a NATO-esque bloc which can be called upon to immediately defend borders with Russia, which was proposed by a working group established by Vladimir Zelensky. Crucially, it would include the United States and other NATO allies, providing Ukraine with security guarantees. Kiev officials stressed in the unveiling the plan Tuesday that it's not meant as a replacement for NATO, but as a legally binding alliance to be in place while Ukraine eventually pursues full NATO membership. The Kremlin's reaction has been swift and fierce, with the deputy chairman of the Security Council of Russia, Dmitry Medvedev, warning that it's really a prologue to the Third World War. If it gets enacted, he described that nuclear holocaust would be the end result. And then the Western nations will not be able to sit in their clean homes laughing at how they carefully weaken Russia by proxy. Everything will be on fire around them. Their people will harvest their grief in full. Their land will be on fire, and their concrete will melt. Yet still, the narrow-minded politicians and their stupid think tanks, thoughtfully twirling a glass of twine in their hands, talk about how they can deal with us without entering into direct war. Dull idiots with a classical education. Maybe stop attacking other nations. And interesting insight into the Russian view of the world, though. Oil's having a good run here today. They're up to 88 now. Can you believe, like, seriously? This is, man. Like, oil was on its way to $80 a barrel, and then the stupid Biden administration has to open their mouth and ruin it, and now we're already going back up to 90. Can you believe that? This is like, that is going to be, oh, they're going to catch so much shit for that. They're going to catch so much shit for that. And the upside is still pushing through. It's kind of making me wonder how much success you could have with a short here. With a short in the micro yields. I think I'm going to sit on my hands. Well, given where we're at. So I would be expecting to see like another, a wave of meta orders coming in here at this location or something. I don't see that. I don't see liquidity conditions being very good. I think that if we do start to get meta orders, that they're just going to push and shove, and we will be able to see them very easily. And I don't think that I should try and like get ahead of them here in this price. Of course he would. Oil 150. Oof. $150 barrel oil in the winter would be so bad. Oh, I don't even want to think about that scenario that you just drew out there, Morgan. I'm trying to think of a poll that we could put together for oil that would actually be interesting, but I'm not too sure I can put it in. I have good options for you. Well, now is a good time for us to start looking for some stocks, right? We'll open up swaggy stocks here and a couple of other things. Ford. Apple, Coinbase, SoFi. I think Ford is probably going to be our go-to today. And change this one over to Ford. Oh, I have to add it to this. Where are you? To this market analyzer here. There we go. Cool. Are they up in the pre-market? No, they're down with everybody else. Well, I just keep that on there. If you have any ideas about stocks to watch, what is IEO? Oh, iShares Oil and Gas Exploration, huh? Almost everything that I'm seeing that's like at the top of these lists in Wall Street Bets are like ETFs. So not particularly helpful. I suppose that not many people will be looking for individual stocks today, though, huh? People, when does PPI come out? Oh, you already missed it. This is on the Wall Street Bets subreddit. At least the page is free of all of the Bed Bath & Beyond bull crap. Right. Oh, man. Ooh, that one's... Thinking back on that. Man, if you haven't watched my last video about order flow on stocks, and go and watch that order flow on Bed Bath & Beyond. It really is, like, crazy stuff. Yeah, I haven't been getting a whole lot of I guess I need to do a little bit better with searching for some stocks. I guess I could use screeners that look for like gappers and stuff, but right now it looks like Ford is the most interesting one we've got here. We'll add that. I wonder if I should change my my thumbnail again. Like I have a thumbnail, but actually let's do it. You know what? Let's do it. Let's see here. Where do I do that? I think it's over here. Bond and equity index futures change. No, I'll just do this. Let's see here, which one, if I can remember which one it is. Do this one with me all like, yeah, we're gonna do that. Will oil be 150 before or after Bitcoin to 3,300? Trying to guess where Bitcoin is going is interesting to me, mostly because, you know, it doesn't give you very many good clues. It does seem to me that what's going on in Bitcoin is large portfolio driven funds are allocating stuff to it on a risk on risk off basis. That's definitely what I see going on in Bitcoin right now. I was looking at Ford and I was like, there's a decent amount of orders going through here pre-market. But the reality is, I think that Ford is a much smaller stock than some of the other ones that we've been looking at, right? It's almost, we almost need like a, how do I put it? Like a feature in Jigsaw to change the columns into showing you amounts, dollar amounts, rather than share amounts. Yeah, that would be interesting. Cool. What's this? Bank of Japan conducts rate checks, says the Nikkei. The way intervention works in Japan, and often in other places, is first they start talking about the level of the asset, that is, job owning or verbal intervention. In Japan, this has been going on since March-ish. The Bank of Japan acts on behalf of the finance ministry. The Bank of Japan doesn't decide to intervene on its own. That means the government basically builds up a consensus that there are serious imbalances and/or disorder/confusion in the market. Job owning usually starts with the chief cabinet secretary, who speaks for the government in front of reporters most every day. A question may be planted so he can respond, "We are concerned about the potential negative impacts of the yen's rapid movement and are closely monitoring the situation." This happened in March. The first one is a warning that it's not going unnoticed. It isn't serious yet. As time passes, consensus is built by more people in different roles by saying they are monitoring the situation. It is, of course, much easier for the Japanese government to intervene when they can go huge, i.e. selling the yen to buy other currencies. When they have to sell other currencies to buy the yen, they have to be more circumspect because supply is not unlimited. In this case, I bet the MOF has been biting its tongue a while. Once there's been enough job owning, the Bank of Japan will take the next step, a rate check. Bank of Japan dealers talk to the street all the time for a rate check is official. It says, "We are raising the stakes." It can be simple. What's your market in the dollar yen for 1 billion? It's a quasi-public signal. Intervention is now on the table. A warning to local banks they should not have wrong way bets on. In the last few decades, the Bank of Japan doesn't want to say mine or yours on the first one. They wait to see the news leak and observe the impact. The news of rate check covering will help remove some speculative interest, relieving some directional pressure. Next, when they go back to rate check again, they might say, "You're at 143.6567. Okay, nothing done for the moment, but I want to leave an order to sell 2 billion at 144.30. This does two things. It tells banks where the first line in the sand is, and it allows banks to sell 144.28, knowing that if it stops there, they have bought 2 billion and are backstopped by the Bank of Japan at 144.30. This is much more effective for the Bank of Japan than lifting the offer because it means they don't have to intervene immediately. If 5 banks buying 2 billion each stops the rise, and the dollar yen goes to 143 as carry traders exit and banks sell to them, making a very high reward to risk ratio in P&L, and the Bank of Japan is fine. Their purpose has been achieved. If it goes directly to 144.30, then the Bank of Japan buys as limit and maybe says reload for another 5 billion. The Bank of Japan doesn't intervene that often. I have been a trifle surprised that job owning hasn't been louder, but the risk is too much job owning left unsupported by lack of sufficient intervention action simply proves job owning ineffective. In this case, spot matters, but if spot stabilizes and US rates continue higher, then this chart starts to fall back, and that really has to be the Bank of Japan's goal. The pressure valves are spot FX, long-term rate differential, and long-term forward rates. Good morning, Jacob. Bank of Japan is not going to be able to beg the Fed to simply stop hiking rates. If the intervention is not successful after a bit, the next lever the financial ministry could pull would be a tax break on repatriation of overseas Forex denominated cash holdings. That is a very large pile of money. So they want the yen to be supported, right? Which could see itself applied to the USD yen rate. The move has lifted book values in Japan and would generate profit and loss tax hit if realized. One might imagine some measure where if Japanco transfers back Forex into yen and then uses more than half the proceeds to give to shareholders or raise wages, then there would be a 10-year tax holiday or tax break or something similar. Postscript. In Japan, level is relative. Most current politicians and cabinet level officials remember the yen at 360. They remember the Plaza Accord and what happened afterwards. They acutely remember the hollowing out of Japan's manufacturing base in the 90s when the yen strengthened. As Forex movements threatened profitability because the cost of making a TV in Japan and selling it in Walmart suddenly meant profits went to zero because they sent production facilities abroad, they remember that. But now the production facilities are abroad because customers are abroad and Japan's population is shrinking and aging at the same time. Japan's politicians and technocrats know that moving next-gen capex back to Japan because Forex is an absolutely huge decision which has to pay off over decades, not just a year. And the financial ministry has been around, and there is, like all well-run non-political bureaucracies, an institutional memory. They have seen carry trades come and go, and they know they can run, so they have to let them run. Where it really matters is when allocation decisions start to impinge quite negatively on people's lives. When it becomes a question of vegetables or rice, that becomes a problem. Japan imports most fossil fuel energy and a bunch of other things. Imported inflation, whether raw goods or forex related, is problematic because wages move a lot more slowly than yen-denominated commodity volatility does. The combo here means Japan's technocrats have to wait to draw their line. 120, 130 was far too early in the face of US inflation and Fed hikes. However, while Japan may not have unlimited FX reserves, it has another semi-secret weapon. Japan runs an enormous private sector net foreign creditor position. It is super jumbo jet size, like 256 ounce slushy size. If they decide to pour it all out, it would be the brain freeze of the century. Japan's wealth owners are big on that position in yen terms in the past 6 months. That is corporate and personal savings, and it matters. Interestingly, the GPIF and the other major public pensions, which invest in assets on an unhinged basis but have a yen-denominated policy allocation, see below in the circle for the policy limits. For the GPIF, actuals are outside the circle and below in the grid. When the yen mark-to-market on foreign asset rises versus DOM assets marks, they have to sell keep the allocations in their range. But they keep it 23 to 27% in the last few years. And this is a long thread. One can see it at the bottom that the last FY they sold a lot of foreign equities as yen value of the S&P rose bigly. There may be more of that this year. There's a relatively common trope which says, yeah, but the government just gets Campo and GPIF to intervene. Wrong. Decades ago, Campo was used that way to a tiny extent, and GPIF too. But that was a long time ago in a land far away. Now, GPIF has a completely independent board, and CIO and Campo is listed. Not happening. Postscript number 2. In the 90s, coordinated intervention was something of a dream. If Japan was lucky, it was a negotiated paragraph of the G7 or G20 statement after the Sherpas met before the summit, or really lucky a separate statement. In 2011 and 2020, the Bank of Japan, ECB, and Fed conducted coordinated intervention, and communication was for the Fed and Bank of Japan driven by policy agreement. What Japan, the Fed, and the ECB should want is a coordinated intervention which allows spot to stabilize and forward to extend with rate differentials, reducing the hot money aspect of spot movements. The question is really where the Fed will feel comfortable doing this. It is possible that the Fed could explain itself into the position that a weaker dollar to offset possible hard landing risk would be beneficial as they hike short-end rates. But as one astute commentator has pointed out today, it isn't easy to manage this because US rates could go higher than most expect. I agree and have agreed, and there is a chance that the Forex rate differential relationships get messier. Okay, well, I'm glad that I saw that and that we read through that, even though it was a very, very long. I do want to point out that the yen has seen some strength today, and this move up has been well correlated with the move in the Japanese yen. So that might be a catalyst that we could utilize more effectively for a trade. With the Bank of Japan stepping in and supporting the yen skew the correlation between the treasuries? Well, yeah, that's what he was kind of saying is what happens when the Federal Reserve keeps raising rates, but the Japanese yen is trying to support the yen. That could be all sorts of messy because they've been so heavily correlated in the past, right? Question in my mind, though, is, okay, so like we did have a move up. Let's say that it was partially liquidity conditions, partially support from the yen. Next key, like kind of spots that we have above us are 29.5 and then 03. So to here and then to here. So that would probably be enough for $30. I don't know. I think that this location is probably okay for a short rate call. Let's just kind of keep an eye on it. Oh, okay, so we finished through that playlist. Shall we do Lofi? We're gonna test 3900 again today. I'm scared to make any kind of a call like that. That was such a good thread. Joseph Wing retweeted that. Joseph, I love you so much. I wanna talk to you. It's been so insightful. Yeah. Well, you did make a call yesterday, but I don't know what you didn't tell me if you like took it off or how you managed the trade, because it in the longer run it did go against you pretty hard, right? But it did go up for a little bit, so I don't know if you took profits on it or not. Well, I'll follow this guy, but I'll also follow the guy that wrote the thread. He must be in Japan. That's cool. See that reloading at 28? Yeah, you had some shorts. That's good. Dude, I had a guy on TikTok tell me that he had like 10 SPX puts. Like, holy crap. You made some bank yesterday. But he still had them on. He might lose some of it today. So like the initial move that we got in the S&P 500 here was a little bit to the short side for sure. But not too terrible yet. And it does look to me like the way that the currencies and the interest rates are moving are generally positive for equities. So I think that a pullback, I think I'm okay taking a trade here in interest rates. I don't know if I'm okay taking a trade in the S&P 500. I'm not too confident about how it runs out there, but let's just kind of put it out there like 39.55 long, and see how that turns. So they fill the guy at 28, and then there's absolutely no desire for more selling there. Let's just keep an eye on it. Could continue to just chop in this range. Could see a really strong down move again. I don't know. The risk I have with this trade, well, that's not good. The risk I have with this trade is somebody coming out and saying something, right? Okay, they did sell through. I'm always checking the dollar before the open now. If that one has already retraced a bit, I will step back from buying the S on the open. I really don't get how people expect a day trade without being able to see the dollar. I really don't. Okay. Dollar and VIX are crucial. Yeah. I wish I had a better way to do VIX for you, but my general strategy for dealing with not having direct VIX data, not live VIX data at least, has been to just track realized volatility closely. Nope. Want to see them hold that 28. Nick Timurrell's based on the PPI out this morning and yesterday's CPI. Economists can fine-tune their estimates on August core PCE. Nope. Trade might not be done. It's just my spot was not the appropriate one. That was kind of more of a breakout and it didn't go. Whereas getting out here might be like exactly where it turns, but I think that I have no choice but to deal with that for now. Where was I at? Where was I in it? 30? 43. 43. Yeah, that's okay. There's growing risk of the pound hitting parity versus the dollar for the first time ever. Strategists warn. That whole thread is kind of making me think, will all of them intervene to deal with the currency rates? Like, you would involve the pound too? To prevent the dollar from getting too strong? Because that's basically what's going on here, right? Dollar's too strong. Yeah, I'm glad that I bailed on that, because that was another little leg. Kind of interested to see what I might see here at 24.5. I wouldn't say that I'm seeing a strong downturn in the yen for this down move in the ES, or sorry, in the treasuries. What I am seeing though is that oil looks really strong. It's touching 89 now. Right there. No, come on. Okay, right there. S&P 500 looking good there, looking good. Does look like they're gonna try and so I'm seeing some encouraging signs at 25. But the liquidity in the micros not quite as a little suboptimal, to be honest. Yeah. Look at that. Some pushback there. That's interesting. It did break though. It's 1,500 contracts at 25. Okay. So I was kind of putting a little feeler out there, and the micro did not react to those orders. So that's not a positive sign. I'm a little early here though, so. Yeah, it's definitely happening here. Rather, there's some volume coming through at 24.5, 25. So it does look like some market maker rebalancing may be happening in this location. Yeah, pretty low liquidity at 25 though. Oh, that's a better uptick. Well, that move in the S&P 500 wasn't bad. I mean, it's coming back, so we'll see what it does here in the long run. If that's just a pullback or if they're going to flip back down to the other side. And yes, the moves are looking pretty topsy-turvy. Okay, well, liquidity looks a little bit better at 25-24.5 this time than it was last time that we were there. The pace of volume is slowed a little bit. I'm not really seeing a whole lot go on in the yield curve. Maybe flattening still, but unclear. Okay, there was a big shift there back to the upside, especially in the 5-year. Need a better bid than that. If we're still in flattening mode, then we should see the 30-year lead this. Let's see. I mean, the 30-year is 2 ticks up. There's 3 ticks. Good stack too. Still feel really anxious about it. Though we did have some good ticks there. I'd like to see the 5-year push 12 there. We haven't touched it yet. Come on. Yeah, not helpful. So something I'm noticing here in the micro 10-year that's a little different is that when I do see volume come through, it's very often hitting through multiple prices, like people are slipping through. I wonder if that means that there are just bigger traders trading the micros at the moment because of all the volatility. You see all that fighting there? Well, I'd rather see that kind of fight happen, you know, a little bit, with me a little bit in the money. Yes, so when it's ticking around, they're stacking decent amounts both sides when it does tick. Okay, not that time, not 25 half. Where's the E-mini? Well, the downside on the E-mini was limited. We'll see if they go for a new high. I have to say, those are pretty wide candles in the S&P 500 to start the day off, isn't it? Well, the treasuries are all moving together. We're not getting the move in the Japanese yen that we're looking for, though. Wow. So do you see that at 25 half? So there was a gap at 25 half. That was the longest gap I've seen in the treasury in a long time. Okay. Well, they pushed it up there and after that, but that was really weird. Well, are they moving together up or down? It's unclear. It looks like they might be moving to the upside, but they've kind of been chopping around in a 4-tick range. But like, I don't know, what we just saw there was really unusual. I've never seen anything like that before. So, and there they take 12 in the 5-year and a really strong stack on it. Maybe we are going to push back up to the highs. So they're at, I think it was 26 or no, it was 25 half. Nobody wanted to bid or offer at 25 half. Eventually an offer went up and they spotted up 3 ticks. So I kind of wonder if the buyers said, okay, there's no more liquidity willing to put up in this spot. It's been, I mean, we had this kind of move up after the PPI going up into like the top of the hour. But that's been like an hour. So, you know, if there was going to be another move, meta orders or something like that, you would think that it would have already happened, and it's not. Right? So somebody got fed up with it and decided to move it, I guess. I mean, that was pretty good to get a good bid at 12 and everything, but no, still not following through, right? The bias says Jeffrey would prefer just 25 basis points due to concerns about potential overstill. Policymakers also haven't paused long enough. Okay, so here's the analysis on that I feel is missing, and that is how do you calculate whether 25 basis points is appropriate or 50 basis points is appropriate or 75 basis points is appropriate? So it seems to me that the way that the Federal Reserve does it right now is based on sentiment. It's like, if we're concerned about inflation and we need to scare the markets, then we need to do a higher interest rate hike than they were expecting. That's the way that this has been playing out, right? Because we just don't have a good enough model to come in and say, to get inflation under control, interest rate needs to be X. Otherwise, why not just move it straight there? Well, probably would cause a lot of problems in the market, wouldn't it? But you get what I'm saying? Like, of course, there's the concern of the oversteer, but Jeffrey doesn't know any better than anybody else does whether 25 basis points is more appropriate than 1%. This is an unanswered question in central banking, right? Yeah, well, so FTH, I do think that we'll probably continue to see yields over the next few days rise. At the moment, one of the dominant factors in the market is the Japanese yen coming in and intervening. There's been some degree of intervention in the Japanese yen. Yeah, if they did only do a 25 basis point hike, the S&P 500 would go straight to all-time highs, probably. Yeah, well, maybe not all-time highs, but there would be a rally, right? For sure. For sure. Well, so what I'm getting right now in the treasury, somewhat of a liquidity hole around 25.5. Neither side really looking like they're going to go out on a limb to push it. And when I say like a liquidity hole at 25.5, like it's been a long enough, like it is healed. Like they could try and make another push. It's just it's not coming. There is still this hint of like flattening going on. You think 75? Well, we could do a poll on that. Fed hike 75, 100. Yeah. Because yesterday it was 20%. This morning it's closer to 50%. Europe is screwed. Yeah. You know, I always, I'm really careful, you notice, to try and make like a final, like, at least in economics, you know, in politics, there very often is like, this is a very decisive thing. And unless something really crazy happens, like this is the way it's going to play out. Whereas with economics, you can never be 100% sure, you know, because whatever it is that you're seeing might not really be what it appears, right? Because the markets are just not informationally efficient at all. Yeah. So I don't want to say like Europe is for sure screwed, but at the moment it sure doesn't look good for them, does it? There's some good uptick. 5 years not back there yet, but the 5-year, or sorry, the 10-year sure looks like it's likely to break out here. You think they'll do it? Maybe it's awfully close. It's screwed already. Well, the economic situation doesn't look good. Okay, there, no. Still waiting for break and for, okay. That makes me feel a little bit better. I'm seeing this thing in the Japanese yen. Like the more I think about it, the more I'm convinced that like there's a really good chance that we could see coordinated currency intervention in the next 6 months, right? Well, the war is over soon, guys. Ukraine is winning, so it's getting better. Well, that's what I hope. That's a good point. I'm kind of thinking that what's most likely to happen in Ukraine though is that you know, they kind of like the lines kind of solidify and then things just kind of die down, but like it never goes away. You know what I mean? Like here's the thing, Russia hasn't declared war or anything like that, right? It's a special combat operation. So how do special combat operations happen when the United States is doing it, right? That's something that goes on forever and ever and ever and ever. So I think that there's a good probability with the Ukraine situation that it just kind of gets left in an unfinished limbo state for a very long period of time. Okay, so they are starting to test the ends of this range, and they're pushing them much faster. So that's really odd. I'm not sure that we can make any conclusions off of that, except for that I don't think that this is very good. Speaks well for the kind of trade that I'm looking for. Russia will still make one more push, I suppose. So it sounded like they were pulling back to I can't even remember the name of the place, you know, that peninsula area that they've had this whole time, you know, that they took away back when it was Obama. Like let me put it this way. The victory that the Ukrainians have had is a really significant victory. It's going to be a crushing moral defeat for Russia, and I think from that perspective, I think that you can you know, we're getting to the point where you can start to say that like Russia is certainly is losing this war and is likely to lose this war. The problem is just that I think that it's difficult to have like a total victory where like Russia just completely backs off and they say, oh, we're sorry and we're not going to attack you any, you know, all that sort of thing. Like that's not going to happen, right? Russia is going to try and save face. And if the war is really not going very well for you, the way that you save face is you just kind of pull back and then, you know, to a safe spot, and then leave the war in an uncertain state, right? Like the war's still going on, even though like we've basically pulled back all of our lines, right? And nothing's really happening anymore, right? So that kind of sucks for us in the markets because it means that all of the economic problems that we're having as a result of the war, you know, that there just continues to be an elevated level of uncertainty surrounding those things, right? But the larger picture, though, I guess, is that Russian oil and gas ain't coming back, right? The West is basically, and as long as Putin is in there, they don't want anything to do with Russia, right? It will take a lot. It will take a really big change in the leadership in Russia and their stance and everything to really gain the trust to have trade relationships again. So those problems that we're having on the energy front, those are going to continue to be a problem no matter what. And it doesn't necessarily what matters, what the Ukraine war matters for economically wise for us has more to do with how much money are Western governments going to throw into it. How much debt are we going to take on? That's what I think matters on that one now. Oh, they don't drop. Well, yeah, I mean, there's definitely the concern out there that in an effort that they escalate. That's a possibility too, for sure. Lower probability, but a concern nonetheless. And they're always talking like they'll do it, you know? He's like, I'll do it. Don't make me. I'll do it. I'll do it. Okay. Okay, Russia. End the world. Let's see. If I were the Russians, I would just stop Putin before you get to that point. Take him out of office. There's already signs that the people and the politicians are fed up with it, but Putin has too much power, right? Like if this was more of a real democracy like we have in the United States, like he'd be gone already, basically. Or at least like all of his political power gone and the election coming up and almost certain to lose, right? But it's Russia, so... Okay, so we did get the fall back down into the liquidity hole here in the treasury, although that one drop was a little bit different. Let's see if they travel back to the other side again or not. It's chopped around in here quite a bit, hasn't it? There's 12 again in the 5-year. Like, they haven't made enough progress for it to matter on either side. But if one side was having more success pushing it their way than the other, it looks like it's the buyers, right? Europe will have to buy energy from the US. Europe is going to have to start making their own energy, right? It's gonna be a long, like I said, man. When you look at what are like the fundamental problems right now, these are problems that are gonna take a long time to fix. Ooh, big stack at 26. 1,000 lot just stacked there at 26. And I am seeing the yen kind of sticking with them. The big question, was this whole drama planned or was it just a coincidence? What, the whole drama with Russia invading? I feel like you're getting into a conspiracy theory that I've kind of heard around here where like, yeah, so like one of the things has been that like, okay, you create all of the problems so that you can then pose solutions, right? But wasn't Russia the ones that have been fighting against the globalists? And, you know, like, why would the Russians be the ones to come in and be the key trigger for all that? It doesn't make much sense, does it? But no, here's what's really going on here. Here's what's really going on here, okay? The left worldwide, the left has a environmental policy that is not practical. That's what's going on here. And everybody's been warning them about it for years and years and years. And now we've come to the point where it's obvious that the decisions that they've made were really poor ones, and they're still in denial about it. It's a very, very thick liquidity here between 26 and 26.5, right? The 26 is still stacking. Okay, well, they bought through the 26.5, but it's not, you know, it's not staying bid. 26.5 is and there's a lot at 27. I wonder, you know, if this is a whole thing about the so, oh man, actually, so for the kind of move that we're talking about, so again, this is like Japanese currency intervention, maybe possibly what's moving the treasuries up. Okay, so if I'm doing currency intervention, and there's like 1,800 offered at somewhere or something like that, I don't want to have to buy through them, right? Like the less contracts I use to make it happen, the better. So I kind of wonder if they don't just middle around here a little bit first. The question is, why the 1900 at 27, right? Anyways, the thing that I continue to see really interesting about the left, I get into politics, but I mean, I think that it's important stuff to try and understand the world. The left is more likely to be saying follow the science, right? But when they also seem to constantly be under this spell. It's like there's like a media narrative out there, and they'll always toe the line with it. And like, even when you see something happens that you would think would just completely smash their world view, they don't see it. It's like they're in this constant, they're stuck in this constant mass hysteria of some sort, right? You would think that the oil prices spiking, you know, globally and everything would maybe make them go like, oh, maybe our policy on energy was bad. Maybe our policy on nuclear energy was bad, right? But they're not really acquiescing, are they? So it's like, okay, at what point do they have to, you know, do they have to concede? So now that they've taken 26 offer, like, there's not much volume through here, is there? You think Putin would have invaded if Trump would have still been there? I think that it is very likely that if Donald Trump was president, that it would not have happened. Yes, I think that Russia would not have felt as threatened, and that Donald Trump would have done more to give them reassurances and try to avoid the conflict. On the other hand, if Russia did invade Ukraine anyways, Donald Trump would not have spent as much money as Joe Biden has to support the Ukrainian army, and Ukraine maybe would have already fallen. So, I don't know. What does that mean in the larger scheme of things? I don't know. I guess the reality is that it doesn't matter anymore, does it? Because it happened. Doesn't matter anymore because it happens. 27.5 pulling. You're getting a little bit more dynamic on the inside here, but the 27.5 is willing to pull. Like, the reason I bring that particular point up is because I think that Donald Trump has some significant roadblocks to overcome if he is going to become president again. Okay, just from the outset, it's happened before where like a president lost and they ran again. I think there has been at least one situation where somebody that lost a major election came back and later they won it, right? I don't know about somebody that was president and then lost it and then came back. I don't think that that's happened. But Americans, you kind of get branded as a loser to some extent, and so it's really hard to come back from that, right? So that's your first roadblock. But then I think that your next big roadblock is that Donald Trump kind of said a lot of things shortly after the invasion that I think that the media misinterpreted, of course, but that really kind of suggest that he was taking Russia's side in the conflict. And the American public overwhelmingly supports Ukraine. The American public overwhelmingly supports Ukraine. So I think he runs against, and even if it's against Joe Biden, that becomes a point that comes up in debates over and over again that'll be really, really tough for him to argue. Like really, that'll be really tough to overcome. Right. And then on top of that, I'm not going to call it like the election denier thing. Okay. Like I don't blame Republicans for thinking that something shifty was going on in the election. Because everybody stopping the counting at the same time when every other time we've had an election, they just continue counting through the night. And then them like not letting people observe the counting and stuff like that. I mean, come on. People are going to be suspicious for sure. For sure. Okay. But it was more the way that Donald Trump handled it. I think really says like something about his leadership style, right? And I knew this about his leadership style. I think that a lot of people that were Republicans or that voted for him understood this about his leadership style for sure. But like, here's the thing. The world was different in 2016, right? In 2016, it was kind of, we had come off of this long time and it was like, hey, we can take risks. Now is a time that we can take a risk. And I'm willing to go and put a president in there that shakes things up. And you know what? I'm glad that we did it. I am. I'm glad that we did it because I think that Donald Trump did shake the establishment up enough that in the long run, there is going to be good policies and a better direction at the end of all of this, right? But that is not this world now. This world, you need somebody that is good with teamwork. You need a president that's, I don't know where you're going to get him from, but we're going to have to work together to overcome these problems. We really will. This whole antagonism, everybody's saying that there's going to be a civil war and all that. I don't think that a civil war is going to happen, okay? But I see it as a very significant stumbling block to progress in America as a whole, because these are not issues that one party can tackle on their own and by ramming everything through, with the majority. It's just not, right? And I think that when the next, 2024 comes along, I think that Americans will see that, because the situation doesn't look so grim, and I don't think that Joe Biden administration is equipped to deal with this, right? So that does make it more likely to be a Republican, but that's why I'm saying that, like, I really do think there's a good chance that if Donald Trump does run again, and I think there's a really good chance that they just convince him to not run, but if he does run again, I think that Ron DeSantis has a good chance at beating him. Serious, so that's kind of like the reason why I bring that up is, like, really what we're thinking about is, like, who's the next president going to be in 2 years? I don't think it's going to be Donald Trump. How he represented himself on the world stage was not like an American president. In my view, he did make many mistakes there. He exposed the corruption. I think that's what I think. Live action. But this stuff going on with, like, that's why the inflation, again, like, that inflation report yesterday ends up being a really big deal. Even if let's just say that this is like the low for the next month. Okay. Like best case scenario, yesterday overnight was the low and markets continue to rally all the way up until the election from here, right? That inflation report is still really important because it changes the narrative to we're still dealing with inflation and the administration is not equipped to be able to deal with it, right? That's a really, really big thing. And now everything else that Joe Biden does is viewed in a different lens. And what is Joe Biden doing right now? He gave that big speech. This was all coordinated. He gave that big speech, and now, like, they're raiding all of it. Like they went and raided the pillow guy. What the heck is it that he's going to have done that justifies the FBI tracking him down on a hunting trip and all of this sort of stuff? Like, it's really kind of crazy, heavy-handed tactics when you think about it. And now you start to view it if the American public starts to view it in a different lens, then it really turns into, wow, there is a lot of government corruption out there, and the administration is basically using the Department of Justice and other federal agencies like the FBI as like own private Gestapo. Like I think that it's going to have a major effect in the long run, because when Republicans take over, I mean, like, seriously, the Republicans are going to win the House in November, almost certainly. I would be so shocked, dude, if I'm wrong about that. I'm going to really question my handle on politics, okay? If the Republicans don't take the House, okay? Republicans probably going to take the House. What's the first thing that they're going to do? They're going to start pushing back against that stuff. They're going to start making the case that these people that are being held over the riot, that they're not getting due process. They're going to investigate the moves by the Department of Justice, right? Like, one thing leads to another, right? That's the path that we're going down. Was it a good move for Democrats? Huh, Joe? Come back after November. Tell me, was it worth it? Taking this cynical approach. Listen, it's a problem with the world at large here, and this is where it comes back to you, right? How do you have success? How do you make money? Whether it's you're making money or there's something that you want to do, you're have your family better, make yourself better, whatever the thing is. What are the patterns? Where do you put your focus? What are the kinds of strategies that you use? And in the wake of the pandemic and the absolute manic market that we had after that, it seems like everybody kind of got into this space where it's like, I'm just going to do the cynical thing. I'm going to do the cynical thing about, society sucks, and this is the thing that we really shouldn't do, but always seems to work, and I'm going to go and I'm going to do that. And I say that the real way to success, if you want to make money, make a good product that the market needs. That's the best, most reliable way to make money in the market. Identify a market need that isn't being served and fill it well. That's how you make money. Don't do the cynical thing. Okay? I wish that more people were just satisfied with making money by making a good product rather than trying to do whatever is the easiest thing to try and convince people to give them money, right? And when you see the politicians start to run that way, oh, I'm just going to manipulate the public. I'm going to rile them up and make them divisive and all this sort of thing. Or like freaking movie studios, the way that they market their movies these days, like they're intentionally, they intentionally want people riled up because it gives them media attention. That's not good. And in the long run, it will bite you in the butt. Just do things the right way. Huh? Integrity, excellence, teamwork. You do it those 3 ways, you can have success. And you can have better success than if you go and you take the cynical approach. Is it because most people have lost their hope with government? Well, I'm okay with people having lost their faith in government, because then what they'll start to understand is that government shouldn't be the solution to everything. Yeah, there are problems and we need to have solutions for them, but that solution shouldn't always be make this one really powerful organization even more powerful, right? Just me. It's not Joe's fault. The investigation would have happened with every. No. This like the pillow guy would not have been arrested under any other president. Okay. Any other president would have said, for the sake of the peace, we need to let this go. I'm trying to argue from a Democrat perspective. I'm not a Democrat, but like if I was a Democrat, this is the case that I would be trying to make for them. For the good of the country, listen, I know there's this whole thing about like they're trying to overthrow the government and everything, but that's really not what was happening. Because if they wanted to overthrow the government, they would have taken guns, they would have killed people, they would have done it. Okay. These were just people that were concerned about the election and wanted to ensure that it was properly investigated and that it was fair. Okay. That's all. And yeah, people did dumb things. Yes, they did. The people did dumb things. Okay. But trying to hold it as treason and making a big deal out of it and using it to your political advantage is not positive for the country as a whole. It's not. You know what would be healthy for the country as a whole? What I would do if I was Joe Biden right now, I would be pushing for an election integrity bill. I would be saying, okay, like you guys had some problems with the way that the election was run, so we're going to change some things. The ballot counters, they count until it's done, period. Can we all agree on that? Is that an okay call to make? You count until it's done, right? We have rules about what kind of machines are actually allowed. There has to be a physical record so that you can't just go and change a number in the database, right? I don't think that a Democrat would ever go for this, but hey, maybe voter ID. Okay, that's how you heal. I'm sorry. So you go and you do something that everybody can agree with and resolves the concerns with the people on the other side, so that we can work on the real problem. Because the issue right now is that we've got a real problem with supply, and the reality is that Democrats are not equipped to be able to deal with this. And if they were forced to have to negotiate with the Republicans and make an actually good bill, it would be a really good thing for the country, right? Teamwork, folks. Let's have teamwork. You're not so confident in November live. I'm not going to read that whole comment, but that was a funny comment. The way that things are going right now, it's looking really good for Republicans. But we're going to have to wait like 2 weeks. Wait 2 weeks and we'll see where the polling is at, right? Wait 2 weeks, see where the polling is at. The states are in charge of the elections, not the federal government. Well, that case is going to the Supreme Court, right? I don't know how that one turns out. Because I don't think that... So there's this whole thing, like, if the state legislature comes in and makes a rule, and then, like that you can't have ballot drop boxes, for instance. And then a court comes in and overrules them and says, actually, you can have ballot, but I think that the court is overstepping its bounds, and that section in the Constitution is kind of relevant. But what Democrats are saying is that this turns it into the legislature can do whatever they want, regardless of whether it violates the Constitution of their state or the Constitution of the United States. That's not the case. I don't think that the Supreme Court would rule it that way, but that case is going to go to the court, and that's going to be one to watch, right? Okay, well, the treasuries did make another breakout to the upside. We'll pull back. We'll see if they go again. I'm not getting like super clear signs of like a meta order long or anything like that. What I am seeing is accompanying strength in the Japanese yen, which is what we're expecting to see. So this might be a situation where we kind of have to just wait for a quiet move up and rely on what we know about the currency flows to drive us, because we're not going to see it quite so clearly in the order flow, although we should see it in how the orders pull. And in terms of like what else is going on in the market, oil has pulled back. So their high was 89.6 and they have dropped back to 88.4. So that's looking like a pretty solid top. It's actually kind of doing a head and shoulders pattern. Not that that matters, but let's just put the possibility out there that it drops all the way back to 86.6. I don't know. I think that oil is probably going to continue to be somewhat strong though. S&P 500 did make a new daily low. They have recovered that low for now. The S&P 500, it doesn't look like it's going to be like a retracement day per se, but it's handling it pretty well so far, at least. So, and the other assets, I'm not really seeing a whole lot. Although one that has moved, I haven't mentioned this a lot, but natural gas is up 4% today. So that's that little ding was Jigsaw telling me I had trouble reporting back my statistics back to Jigsaw. That's okay. It just means that if I go to Journalytics, it won't have all of my trades yet. Well, I think we had a good conversation there about politics, did we not? I hope that I'm doing better at inspiring people to focus on teamwork a little bit more. That's. I mean, I've been thinking a lot about excellence right now, but what society needs right now is teamwork. So can I take another step here? Teamwork is really hard online. Doing teamwork is really hard online. It's a little bit different. You know what? This is a big drawback from everybody working from home. We need to get people in person more. We need to do it. Like, it's so weird to be saying this because I have been the internet geek my whole life. Okay. Like when AOL was first available, I was on AOL. When BattleNet was the thing, I was obsessed with playing and chatting with people on BattleNet when I was 14. I've been like hyper engaged in internet communities my whole life. And that's why kind of what led me into doing what I do here, because, if I was going to trade, there needed to be a community to interact with, and it didn't exist. So I made it. You need a countrywide Slack channel. There you that'll fix it. Well, this is the thing is that Slack doesn't always do it. There are some, so like, well, it is interesting because when I think about my work, we do pretty good, but we have a morning call every morning, and I think that the teamwork is going pretty good. But sometimes, I need somebody and I can't get their attention or where, that really sucks, And we recently had a barbecue where we got to see people in person again, and it was different, right? When I was dating, the first love interest that I had after dating, I met them one time, I got their number. When I got their number, I didn't even get their number. I added them on Facebook. That's what it was. I contacted them and started talking to them, and I didn't really intend on talking to them a whole lot, but then we ended up talking a lot. And it was a bad thing. Like, I don't think that they were really interested in me. I don't think that they were looking at the situation the same way, right? Like, it's very difficult to build relationships like that when it's not in person, because people just don't react to it the same way. They just don't. There's even if you got like the VR headsets and all this, it's never going to be the same, guys. There's like chemicals and stuff, and I don't know what it is, but it's not the same thing. And I saw this person on TikTok the other day with some girl, and there was a message that was a little concerning to me. It was like, oh, things feel very, very empty, and I don't know what to do about it. And they were a very good looking person, by the way, but the video didn't have a whole lot of views or likes. So I'm like, well, I'm like one of the only people that are going to see this. I got to say something. So I commented on it. But everything that I've seen in my life has been that what happens online is not the same thing as what happens in real life. And if you're having problems, the solution is less internet. And this is coming from somebody that's been obsessed with the internet his whole life, and that thought that Facebook becoming, oh man, if there was anything that I was ever wrong about, it was that, man. When Facebook first came out, I was introduced to it by a girl. I got into it because of a girl. But then, I saw the value of it in promoting things. So that's kind of what I did. I was using it to promote my DJ stuff. And when they switched Facebook to kind of being more like Twitter, where you post the status updates and stuff, and like the larger general public started to get involved in Facebook, and Farmville was a big deal, I thought that this was going to be a great thing. That was going to be a great thing. How wrong I was. I think that was the most wrong I'm ever going to be about something. Because it did not turn out well, did it? Take Sundays off, no internet. Yeah, and like here's the thing. I use the internet a lot. That doesn't mean that you should be like me. Well, you guys, you trading, you probably gotta be like me, right? You gotta stay informed, and the internet is the best way to do it. But as we're doing that, we have to be very conscious that the way that we're plugged in is not what the human brain was evolved to do, and that there's a lot of problems with being that engaged on the internet, right? That we have to be aware of. And we should be very aware that just because we're on the internet a lot doesn't mean that that's what everybody should be doing, right? Yeah. And yep, I have to intentionally unplug. I'm trying to read more. I think it's been a very, very beneficial thing. Yep. So, if we've got some problems in our country that we need to heal, we need to get people in person more often. We need to get people in person more often. That doesn't, and you know what? It shouldn't be like, let's get together and have a debate. I don't think it should be that way. I think that it should be like, let's have a barbecue, and we'll have people that are liberal and conservative, but we're not going to talk about politics per se. The focus isn't going to be politics and debating, right? The focus is going to be developing relationships with people. Teamwork. We'll do teamwork building exercises. That's what we need to do. Should we do this? Maybe. Sometimes I'll have an idea and I'm like, this is a good idea, but I'm not the right person for it, right? Organize nationwide events where we go around and we try and get people that are Democrat and Republican, and we'll say, it has to be 50-50. And then we do team building exercises. I don't know anything about doing it. Well, I need to learn. There's got to be these people that they advise corporations and do team building exercises for there's got to be people that have done that and written a book about it, and I need to read that book. We need more I don't think that's a word. Need more solidarity? Is that what you meant to say? This is moving back up, and oil is moving back up. Oh, aren't you glad? Aren't you glad that you were sitting here in this stream and Seth said, oh, there's a head and shoulders pattern on oil, but that sort of thing doesn't matter at all, and it's not very predictive about where it's going to go. Huh? Goes back for the head test. Yep. So here's my problem. I want to be all about teamwork, but you know what else I want to do? I want to argue with and berate price action traders. That's what I want to do. Okay, subsidiarity. Authority needs to be delegated to the lowest level of government. Oh, really? That's. I didn't know that that's what they called it, but I agree with that. I mean, that's the conservative position, really. I've found that politics almost always seem to boil down to, do you think that the power should be in the federal government or the local government? I digress. That's the word for it. Cool. Subsidiarity? It's not a very good word, to be honest with you. I would expect it to be a name that like ends in archy, you know? Local archy. Something, you know. I don't know. Nobody's gonna know what that means without explaining it to it. Subsidiarity. Well, that just means that you give each other kickbacks. That's what I that's what I think when I hear that. No. I want to so here's the thing. Next video, I want to bash on price action. How do I go about this? Because what I want to do is I want to be like, yeah, price action, it's total nonsense. I laugh at all of the people that use it, etc., 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 right? Is that really the right way to go? Would that be fun and amusing, or do you think that it'll just piss people off and make me a pariah? I feel like it's an important... Listen, price action, it's the most popular retail day trading strategy. It doesn't work. Like, it doesn't work. It's just... It's particularly good at fooling people is what it is. Because it works really well for taking excessive risk, right? You will get, like, win streaks and stuff with it. And so if you're somebody that, you know, you don't know any better and you just go, oh, well, it's been working this month, that must mean that it works. And now I just got to stick with it. Right. Then you've been fooled. Fooled by randomness. That's what it does. Compare price action to volume. Well, I will be one of the things that I will be going in there and saying is that, look, the one of the major so like the problem with price action is that it's not actually well defined, right? It's in reality it is a marketing buzzword that educators have started to use because technical analysis started to become too loaded of a word, too controversial, right? So they don't want to call it that. But one of the themes that comes up a lot in price action trading is support and resistance, right? They say, well, there's support and resistance, and they're looking for the quote price action around those support and resistance points to take a higher probability trade of it going the other way or whatever the deal is, right? So the problem with that is that what we know about the inelastic nature of markets completely contradicts supply and demand, basically, you know, support and resistance, not supply and demand, support and resistance as it pertains to charting. So basically the inelastic nature of markets basically says that supply and demand is always going to be a net losing strategy, right? So I will go into that in detail. We'll talk about that volume does give you significantly more information about what the current state of the market is, but in the end, at the end of the day, you still have to remember that there is nothing that I know of that you can look at from a technical perspective that is reliable at predicting the future orders, period on short time frames. It's just not. There's too much noise in it. You've got to be looking for a better predictor of order flow. I think Japanese yen, intervention in the Japanese yen, that's a pretty good one to follow. It's going pretty good for me so far. Feeling pretty good about it. Yeah, also trends, higher highs, higher lows, and so on. Complete rubbish. Yeah. Yeah, that's basically price action is basically looking at swings. So higher highs, higher lows, or whatever it is that's going on with their price swing action indicator, and what they're doing at supply and demand. That's what I see as price action. And I've done a lot of reading about, like, I've read, people have sent me like price action trading systems and stuff like that, and I've read them. So I feel like I have a pretty good handle on what price action traders believe. Oh, I didn't see live action's message there before he deleted it. What was that? Oh well. Oh well. Oh, we got an ECB speaker at the moment. They came up just short of a new high there. We was looking for 03, right? 03 was kind of where I was like, okay, 03 is like the high. We'll see. Maybe they do break out later. I think that there probably will be another push up. I was thinking about it and I thought I had more time, but I don't. So I probably should. Yeah, I'll leave that one there and we'll see what happens. Yeah. So I want it to be funny. I want to be a little antagonistic. I kind of want to trigger the price action traders, but in the end, I also want to encourage them to come in and do teamwork with us and understand what really makes the markets move and what is more likely to lead to success in trading. Yeah. That's going to be a hard line to walk. So I'm sitting here. Oh, that's teamwork, but you price action traders are stupid. Can't believe that you believe that nonsense. Well, that's how I feel though. That is how I feel. It's nonsense, and I kind of laugh at. Well, I don't laugh at them. I understand why they believe it. It's quite. Oh, only one order to take me, huh? I thought so. So I had my order there at 3.406, and I thought, with 600 lots in there, of course I was at the front of the line. I thought that there would probably be at least 5 lots that would go through, but it wasn't. It was only one person, only one lot to clear me. Nobody else looking for a fill there. They're all looking for the new high. That probably means, so the reason that pisses me off, it does piss me off, is that means that my exit at 406 was probably a bad one, right? I was mostly just looking at the time and wanting to book the $40 profit and seeing that it might be a while before they push through. But like, look, there's 20. They've still got some orders at 30, and there's probably going to be some pushback and noise around 03. But that really looks to me like I did not get the good exit. Yep. Could have been a $50 one. Was still a good trade, wasn't it? One time I saw an empirical study about the head and shoulder pattern, but I didn't find it anymore. Oh yeah, no, I know when the one. Well, there's more than one actually. I think you might be thinking about the one that was done by the Federal Reserve Bank of New York. So Gary Norden, he redid his book about, why technical analysis is bad. Basically, this time said I'll self-publish it because the publisher didn't want me to say a bunch of things because they publish a lot of technical analysis books. So he was able to, and he mentioned so many studies in that book, dude. Like basically every study on this stuff that there really is. Although the thing that I find really interesting about studies of this nature is that it's usually not enough. Does that make sense? Like, usually the amount of data and the rigor with which they're going through to study a particular thing, it's usually not as much data as I would like to see. You know, like, I would like to see, if you're going to do a Head and Shoulders thing, it's got to be like, I'm going to look at every stock that's ever existed ever for Head and Shoulders patterns on a daily basis. He redid his book. Did I say that? He rewrote his book and made it more up to date, and he mentions many studies in that book. I have mixed feelings about the order flow that I'm seeing here at the highs now. On one hand, I definitely think that I could have made at least $5 to $10 more off of that trade. But I am seeing a lot of volume transact through here. It is kind of at a high. So I am getting some hints that maybe there's some profit taking going on here. I'm not sure I can make a prediction about what it's going to do. But I think that alone is enough to say, okay, you know what, Seth? $40, that's okay. Just be happy with the $40. By the way, what does that... Oh, where did it go? Where did you go, Rhythmic? Oh, yeah, you need to be over here. You need to be on this screen. I did lose $10 on that trade first, so it actually only had to be a $30 winner. Maybe I should have held out for $50. Nah, it's not going right now, though. Not going right now, though, but what does that put me at? 1612. Cool. I would rather be at 1700, but that's okay. I am... There is some pushback in this area, though, right? Like, the thing that makes me really conflicted about it is that if we're having Japanese yen currency intervention, then the amount of absorption up here might not matter, actually, right? Like, the orders will still just come through. But the Japanese yen pulled back from that area as well. So... My read on that one is that I got enough of a signal to take profits that it was a good exit, but we'll see if it goes further today or not. Overall, I'd have to say, given how crazy yesterday was, today, what we're seeing in the market is about as good as it could ever be. About as good as you could expect. So, it's good, right? Good for the economy, I guess. Except for that it's just kind of like I don't know, tomorrow that they could just plummet again. So, oh, maybe not. I thought I just read that they arrested the Terraform Labs founder Du Quan, but it just says that South Korea is seeking his arrest, not that he has been brought to justice yet. ECB's Villeroy, monetary normalization is fully warranted in the Eurozone. I need to do more work today. I should write it down. Teamwork. Yeah, did that. Guess I don't have to deal with that again. Still, I am. I got a little bit more serious about the note cards. I've gone through all of the note cards. I'm reviewing the ones that, you know, I was unfamiliar with. I do need to take, I was pretty busy last weekend. I do need to take a test this weekend, I think. do need to take a test this weekend, so I'm still going to do it. I think I should take it in October or November. I think part of me is like, you know, I really want to smash it out of the park, but it's going to be a tough test, I think. How much? Oh, I don't know. I haven't kept track very well. Probably more than I should. I don't know. Like when I first did it, the schedule that they were putting, I was like, oh, I wanted to go through this way faster than the schedule that they had. And the schedule that they had was very, very aggressive, like with the amount of time that you were going to put into it too. Like it was like, this is a full-time thing for you. So a part of the problem is that I don't really feel a very strong, there's not a strong incentive driving me behind it anymore, right? The incentive now is just to finish it, because I don't think that passing the test is going to do anything. You know, like I'm probably not going to shift jobs unless somebody comes along, unless GSAM comes and like, hey, we really like you, and now that you have a Series 65, we want you to come in and work with us on high net worth clients and stuff. And then at that point, I have to put all of my time and effort into learning golf because I really suck at golf. But do you have any interest? I do. I have interest in starting a hedge fund, but I don't think that I am equipped to do it at the moment. So the issue that I have with a hedge fund is that I have an idea of some strategies that would maybe work for a hedge fund and everything, but my focus has always been really on the execution side. You know, like really, if you were to explain how did you learn how to trade, I think the best explanation for how Sept learned how to trade is he learned a couple of things from block traders at Goldman Sachs and then did his own research from there, right? Really what I'm doing is based off of how block trading works. I don't really know a whole lot about portfolio level strategies, which is what we need to be doing to start a hedge fund. It really interests me. Or just working for a hedge fund. If there was a hedge fund here in Utah that I could work for that needed tech, I'd be all in. But I haven't run across them yet. I gotta get going, guys. I will see you tomorrow. Markets recover. Markets attempt to recover from, I don't know how we say. Yes, until next time, stay excellent, friend. Team, stay excellent, team. Now we gotta put the title in here. No, I'm gonna say Japan FX intervention, because that's really what the trade was based on. So that's what I'm gonna put in the title. See you tomorrow. Stay excellent, team.